I'm glad to be here. Hello, everybody. I can see your names or phone numbers posted up here, and I'm really glad to be back for part two. For those of you who took part last week, we talked a little bit about starting a small business and some of the things that you might need to know regarding registration, licenses, accounting, technology, marketing. Today, we're going to focus on some other areas, and I'm looking forward to our next 20 minutes, 30 minutes together. So, starting a small business, working from home. What are the reasons why working from home could be a great idea? Well, there's a pandemic going on. I hate commuting. I like to work in sweats. I love to work in sweats. It's one of the great things about working from home. And why is starting your own business the right solution for you? Well, there's a pandemic going on. I hate commuting and I like to work in sweats. All good reasons. Um, so other things that can be happening to you, maybe your company won't allow you to work from home and you don't want to go to the office anymore. Maybe, unfortunately, you lost your job and you're looking for a new opportunity. You'd like to work from another location or multiple locations. If you're fortunate enough to have a second home, you might want to be able to work from both places. You can do that in this day and age. You hate having a boss. Nobody's going to tell me what to do anymore. I have an awesome idea for a business. It's the greatest thing since sliced bread. I want to have control over my work as well as the hours that I want to work. Maybe at 10 o'clock, I want to take a break and go to the gym down in the living room. 12 o'clock, I'm going to break for lunch. Well, really, one of the best reasons why starting your own business can be a great idea is because you can. And let's talk about some of the things that you might need to know. We're going to talk about type of business entity, whether you want to operate as an individual, sole proprietor, form a corporation, the like. We'll talk about taxes, what you need to know about paying income taxes and sales taxes a little bit. Um, for those who've been in business before, they know there's a real dilemma between determining whether somebody is an employee or an independent contractor, especially if they're not working full time. We'll talk about that a little, and we'll talk about insurance, different types of insurance that can be helpful to you and crucial even. So, what form of business should I be? List here is of pretty much all the types that you might consider: sole proprietorship, single member LLC, different types of partnerships, different types of corporations, and we'll focus on each of those. So, sole proprietorship, excuse me. This is the simplest form of being a business. All you have to do is start working. You don't generally have to register unless you're starting a business like selling cigarettes or liquor. You might need a state license, but otherwise, you're generally a no fees of organization, and you also have no limited liability. So you could be sued for mistakes that are made or other things if you're a sole proprietor. But depending on the kind of business that you're looking to operate and uh, how much money you're going to make, how much work you're going to do, what your interaction is going to be, this could be a great way to go because it's easy. Now, a variant of this is being a single member LLC. So basically, you would form a limited liability company. But if you are a sole member, sole owner, then you would be a single member LLC, sometimes called SMLLCs. And for tax purposes, a single member LLC is disregarded. For legal purposes, it's a legal entity, and basically you're operating your business personally within the realm of the LLC. So instead of Jane Levy being your name, you would be Jane Levy LLC. So you would actually have a legal name. that you would need to follow. Um, and you could form the LLC in the state that you're operating in. You could form it in Delaware. Delaware is sometimes popular for forming LLCs and corporations because you don't ask too many questions and it makes your company more transportable to other states if you decide to move. But if you're going to operate in New York, and we're going to use New York as a little bit of a focus today, you would need to register there anyway. So it's generally just as easy to form your LLC in New York State. Um, but New York State, like many other states, requires you to publish. And what does it mean to publish? It means to put the world on notice that you are operating under an assumed name, because that's what an LLC would be. You would be Jane Levy LLC. That's an assumed name. Maybe you're going to call yourself Jane Levy Chiropractor. That's an assumed name. Um, you need to publish. And there's a bit of a fee attached to that because one of the publications has to be something like the Wall Street Journal or the New York Law Journal. But to talk about what it means to be a limited liability company and what your advantages are, uh, generally, you personally cannot be sued if you're operating as an LLC. The LLC affords protection. In essence, it's a veil. In the corporate world, it's called a corporate veil that cannot be pierced unless you do something that would show the courts that you really didn't operate properly as an LLC. You keep good records, you keep your personal and LLC funds separate, you sign your contracts as, under the name of the LLC, um, then you're probably going to be protected, except in some cases of negligence, reckless, or illegal acts. And then also in the case of sales tax and payroll taxes, which I'll touch on again in a little bit. Partnership. Generally, two or more people coming together for a business are a partnership, um, unless you're going to be a corporation. You could be a joint venture. That means you could do your work together and then you split up the records and you file them separately. But generally, a partnership is a very common way to operate. Most states require some sort of registration, but it's pretty basic. Generally, if you file a partnership tax return, um, that's going to be part of your registration process. There are different types of partnerships. A limited partnership, which I'm jumping to, is very common in the film business and with Broadway shows because you would have one or two general partners and they're looking to raise money from limited partners who will have nothing to do with the business except they're liable to the extent of the money they put in. They can lose their money, but nothing else. The general partnership, unless um, by agreement you limit the specific relationship of the partners, all partners are liable for all things. But a partnership can also be an LLC, and that's the most common way to form partnerships these days is the formation of an LLC. And if you're only one person, you're by default a single member LLC. But if you are two or more, by default, you're going to need to file a partnership tax return. And what would happen is at the end of the year, the partnership would prepare a tax return. It's a Form 1065 to the IRS, and a K-1 would be issued to the partners, and you would have a number of income or loss to pick up on your personal return, which would come from the partnership return. Corporations. Generally, two types of corporations. The reason for the letters, a C Corp, just means it's described in subchapter C of the Internal Revenue Code. And this is your most traditional form of business organization. Most public companies are C Corps or corporations, except for some that are publicly traded partnerships. Um, they're the most flexible in terms of who can own shares, shares that can be given out as stock options to employees. If there are foreign people involved, they can own the stock of a C corporation, or they can have a foreign corporation that becomes the owner of the C Corp. The corp pays its own taxes. So The corporation is not the shareholder. The shareholder is the person that owns the stock in the corporation. It's a separate person. It pays its own income taxes. It's not a flow through. So nothing from the corporation flows to the personal tax return or is reported on the personal tax return um, unless you become an S corp. S corp is under subchapter S of the Internal Revenue Code, and this became very popular beginning in the mid 80s. Before we had LLCs, an S corp was a way for someone to start a business either by themselves or with other people. It's a flow through. So just like a partnership or just like a sole proprietorship, the profit or loss flows through to the individual shareholders, and it could be one shareholder. And many people still like to form S corps even as a single person, single shareholder. Unfortunately, we don't have enough time today to talk about the benefits of that over forming a sole proprietorship or single member LLC, but be aware that it's something you should discuss with an accountant or a lawyer because um, everybody's situation is a little different. There's no federal taxes paid. The shareholders pay them based on the profit or loss that's passed through. There's often no state income taxes. Be aware that you need to elect to be an S corp within 75 days of the first day of the year or the first day of your formation. Talked about this a little bit last week. What do you need to do to register your business? Well, with the IRS, if you're operating as a sole proprietorship and you don't have any payroll, you're not required to. In fact, you're not even suggested to get an ID number, which is typically called an employer identification number or an EIN. If you are a sole proprietor and you have payroll, you're required to. And if you're a partnership or a corporation, you must apply for an EIN. Um, so there's a link here. It's very easy to apply for it. Accountants and lawyers do it all the time, but you could do it yourself if you were able to answer all the questions that are through this link. Um, New York State is an example of a state that likes to see a business certificate on file if you're holding yourself out under an assumed name. So if you're just operating as Jane Levy and you're helping people do websites and you're getting paid a fee, and technically you don't have to register your business. But if you want to be Jane Levy website developer, um, then you should file through the state, and it actually gets filed at the county clerk's office, certificate of assumed name or a business certificate. So you put the world on notice that you have that name. And usually, just like with forming a corporation and a partnership, uh, the same process of looking to see if the name is available is something you would have to go through here. Now, certain kinds of businesses, you may require a state license. Um, like I mentioned before about tobacco and liquor, just as two examples. Yeah, they require state licenses. Many other businesses too. I think nail salons, I could go on and on. Here's a link that might be helpful for you to learn more about what New York offers and requires of running a business. New York City may require a city license for some things or registration. Um, and you can look at this site, NewYorkCity.gov, to learn a little bit more about what New York asks for. Income taxes. Well, depends on the type of entity you are. So if you're going from having been an employee where you got a W-2 at the end of the year and your taxes were withheld every paycheck, and now you're going into business for yourself, well, it's very different. You're going to pay estimated taxes. Estimated taxes are typically paid quarterly with due dates of April 15th, June 15th, September 15th, and either December or January 15th, depending on the type of entity. Whether you're a sole proprietor, partnership, a C Corp would pay its own estimated taxes, while a sole proprietor partnership, you're going to pay the taxes personally because if you remember, it's a flow through. So you pick up the profit on your personal return. Say with an S Corp, you would pay estimated taxes based on And based on a number of different factors, there's something called safe harbor rules. So you can look back at the year prior and you can pay estimates based on 110% of your prior year's tax. Or if you think your income's going up and you can measure it quarterly, you can pay 90% of your current year's tax on a quarterly basis, but you have to recalculate every quarter. New York City businesses, corporations have a corporation tax, but the sole proprietors, partnerships, if your net income is over $85,000, then there's a 4% tax. It's prorated, so the first from 85 to I think 110, it's not quite 4%, but it's something to be aware of called an unincorporated business tax (UBT). Let's talk about sales tax for a moment. Are you selling goods or are you selling services? Are you selling tobacco? Are you a reseller of household goods that you have a website which you're able to sell products that you buy from companies and you are the middle person? Or are you selling services, accountant, lawyer, uh, psychologist, website developer, blog writer? Um, the general rule in New York State, and it's fairly similar with other states, is if you're selling goods, and goods are called tangible personal property. If you're selling tangible personal property, you probably are required to charge sales tax if you're selling within the state. But if anything, you would need to register. Now, there are exceptions. If you're selling services, you generally are not subject to sales tax, but there are exceptions there too. So you may need to register for New York State sales tax. You want to make sure that if you're obligated to do this, even if you're going to be selling, so sales tax is a tax that's only charged ultimately to the end user. You buy a product in a store, you pay sales tax. But if you're a store buying a product from, let's say, person running the third party middle business, you would give them a resale certificate. You wouldn't pay the sales tax because you're reselling it. But you, as the business that's selling to them, needs to get that resale certificate and needs to be registered with sales tax and keep that information on file. There's a website here that can help you learn more about sales taxes. We could spend hours just on what's involved here. I want to touch briefly on the concept of an employee versus an independent contractor. So you might be working, you have a new business, you're going to work from home, you may be doing all the work by yourself, but maybe you need assistance. Maybe you only need a little bit of help. Maybe you farm out some of your work to a third party who's going to work on this from their home. And maybe it's full time, maybe it's part time. Um, there are very complicated rules as to whether someone is an employee or truly freelance, an independent contractor. And a lot of people say they're freelance and they want to be paid freelance because they get the gross pay as opposed to the net after taxes are withheld. But you need to be careful because you can get in trouble later. And one of the ways you get in trouble is somebody does work for you, and maybe it's only 10 hours a week. They still could be an employee, but they'll work for you for 6 months, 9 months, and then you don't need them anymore, or you don't want to work with them anymore. And because it's a at-will contract, you can say, we're done with each other. And this person then goes to the New York State Department of Labor and files for unemployment. And unemployment asks them, well, were you an employee here? Oh, yes. And unemployment contacts you. Department of Labor gets in touch with you. And you say they weren't an employee. And then the person says, I thought I was. The onus is completely on you, not on them. So just want you to be aware you have to be careful here. And now hiring independent contractors is a great thing because you can cross state lines. You can find people in Wyoming who might be willing to do some work for you. And they can be at a very favorable price, but you do need to have an agreement and you need to just speak to an accountant or a lawyer about what's appropriate in this situation, and how do you handle the worker. So before we wrap up and get to questions, and we want to leave enough time to answer whatever questions you may have, let's talk about insurance. Really depends on the type of business you're in and how you operate. Back to payroll, employees. If you have employees, you must have workers' compensation insurance and state disability insurance, which is not very costly. But workers' comp is crucial. In fact, if you were to have an employee and not have workers' comp, and it was found out by the state insurance fund will send you a bill charging you $100 a day penalty for not having workers' compensation. So this is crucial. You don't generally have to have it for independent contractors, but you also have to be careful with independent contractors if they come on your premises or if they do something for you. Maybe it's delivering a package or something, and they get hurt, you could be liable. So that could either fall under a workers' comp package or maybe under a general liability software. But if you're an accountant, lawyer, psychologist, other type of service provider, you may want to consider professional liability insurance. It's also sometimes called errors and omissions, or E&O, to protect you against claims of negligence or even just errors made, failure to perform certain duties that would be expected of you as a professional. Homeowners, renters. So a homeowner's policy may not cover operating a business from your home. You need to check your policy, whether you own the home or whether you're a renter and have renter's insurance. You may need to get a separate property insurance that would cover operating a business, or as in the next bullet point, a general liability package, sometimes called commercial general liability, can cover things to your property and other things that could happen in the course of your business. If you sell products, it could be an innocuous product that is a soft cloth uh, and couldn't possibly hurt somebody, but somebody has an allergic reaction and they get very sick and they sue you. You may or may not be protected, but if you had products liability insurance, you'd be better protected. So just something to consider depending on what it is you do, particularly if you sell products. Business continuity or business interruption insurance might be important to you. During the pandemic, people that had this insurance, some of them ran into problems with their insurance carriers that they wouldn't pay. Many of them are actually winning in their suits against the carriers. But this is something to consider. And cybersecurity insurance. Actually, we have two more parts to operating a small business from home coming up in the next number of weeks. Part 3 is going to be about intellectual property, which really is about your trademark, and you need to protect it and how to protect it. And the fourth part is going to be about cybersecurity, things you need to know and be aware of. And Amy Goldsmith will be doing both of those sessions, and she'll cover cybersecurity insurance in that fourth session. So that's a quick rundown of just some of the things that you need to know, things that I mostly didn't cover last week, just to give you a taste. Always speak to an accountant before you go into business. Speak to a lawyer too. I'm an accountant. I'm a CPA. I always think the accountant is your best first choice to go to. But we work closely with lawyers in many situations. You'll need to talk to both. And any further questions after today, please reach out. Send me an email. Call me on my office number. I work from home. I sometimes go to the office, but calls to my office phone get forwarded to me here. I see my emails all the time, and I love working in sweatpants. Maggie, any questions that you've been collecting from people?
Yes, we have some questions. Thank you, Peter. And if anyone has questions now, you can use the chat box or you can email info@savvyladies.org. And the first question for you is asking if you can apply for the PPP loan while waiting for LLC approval.
Yes, because if you're applying for the loan, it's going to be based on your past history. So it'll be based not on where you're going to be when you're an LLC, but where are you up to the point of the application. So yes.
Okay, great. Thank you. And we had some questions asking about changing your business type. So asking if you can start out as one thing and change to another in the future. Specifically, one of them I see is transitioning from an LLC over to a B Corp. Another was asking about sole proprietorship, changing to a partnership. So a few questions asking if you can change your business type.
Okay, so you can, every situation is different. Some of them are more complicated than others. If you're an LLC, you can do something that's called check the box. It's an election you make, and there's a form where you say, I'm an LLC, but I want to be taxed like a corporation. And basically, for tax purposes, you become a corporation. For legal purposes, it's no different. LLC and corporation give you the same protection. So that's one option there. As an individual, if you want to become a corporation, um, that's easy to do. You form a corporation, and then if you have acquired any assets personally for the business, um, you have receivables, you have payables, all of that can be transferred into the corporation. There's something called a Section 351 transfer, um, which is a non-taxable event. So you transfer it in exchange for stock. So that's an easy one. Um, uh, Taking a sole proprietorship and forming an LLC is very typical, and you can do that too because the sole proprietorship, you're not giving anything up when you change from it. So go form your LLC, and there is a procedure where if you already have a checking account, I think you can have your bank account changed over, but I don't remember exactly. Uh, Going from a corporation down to what I'll call a lower form of entity is not as easy and is more tricky. Um, but again, every situation just might have its own nuances. And I'm happy to talk with anyone if you want to get in touch with me.
Okay, great. Thanks, Peter. Another question for you is saying, I would like to create a business with a person that's not American. The business is a fitness business, and the first product will be a fitness app. I'm in America and he's Greek. So, Peter, I guess can you talk about maybe some issues with international businesses there?
So the tricky part is if you want your partner, and I'll just use the generic term partner, to be able to share in your profits and share in losses wouldn't be an issue. So then you'd have some limitation in how you formed your business. If all you're looking to do is have an arrangement to work with someone who's overseas and you come up with a plan uh, to pay them, that's something that can be doable as any type of entity. But if this person wants protection and wants to have ownership rights with you, um, excuse me, you cannot be an S corp. You could be a regular C corp. You could have a foreign owner. You could have a foreign member in an LLC, foreign partner, but there are requirements where if there's a profit, there's a high level of withholding tax required to ensure that profits don't get distributed out of the United States and taxes get paid into the US. So yes, this is all doable. I've done this with a number of my clients because I have a fairly large international practice. So I'm happy to speak more to you about what you're looking to do here and what might be the best way to
Okay, thank you, Peter. Another question also related to international. It says, if working with an overseas contractor 20 hours per week, will this fall into the employee realm?
Okay, so I left this out. I'm sorry I did. When you pay somebody overseas for performing services for you overseas, you have no problem whatsoever. You have no requirement. They're not an employee. You can pay them as an independent contractor. You don't even give them a statement showing how much you've paid them. If they're a foreign person that comes to the US to do some work, then it's a little bit trickier. So I hope that answers your question.
Mm-hmm. All right. Thank you. Another question for you is asking if all of the business types that you discussed today, except sole proprietorship, offer legal protection for me if something bad were to happen, like being sued.
Well, a partnership doesn't give you any protection unless the partnership is part of an LLC. So that's why most partnerships these days, um, an LLC is formed, and then a partnership becomes the means of operating it. And then you would have the protection. So LLCs or corporations, you have to be one of those in order to have limited liability.
Okay. And this looks like the last question for you, and it is asking if my business is based in New York and I register at the federal and New York State and city level, but eventually I grow to work with clients nationwide. Do I need to register or take other actions in different states?
Okay, so this is one of the more complicated areas, and it's becoming more and more so only because states are all looking for money. There's a phrase called nexus, and nexus means presence. You have enough of a presence in one of these states that the state's going to require you to file a tax return and or pay taxes there. Every state has different thresholds. So, for example, if I had a business in New York City and I sold um, some products and I sold $15,000 worth of products into Texas, I have no obligation to file there. And other states would be the same because there's different thresholds. Some states there's a threshold of California, I think it's $500,000 of revenue. New York, it's a million. But if you, and that's only if you're selling into the state. If you actually have a footprint there, meaning you travel there to do the business, um, you may have a sales tax obligation as well as an income tax obligation. But every state is different, and there's actually, if you're interested and you email me, there is a chart that gives you a very simple breakdown of thresholds by state, what you need to pay attention to. We're finding more and more that we have to file in more states where in the past it didn't
Thanks for explaining that, Peter. It's very helpful.
matter.
Okay, so those are the questions that we have today. But as Peter mentioned, if you have further questions, you can reach out and we will be sure to share Peter's contact information with everyone. We will also make sure in our follow-up email we send you the link for part 1 if you weren't able to catch that. And we'll send you the links to register for parts 3 and part 4 in this Starting a Small Business series. So I want to thank everyone for joining us today, and thank you so much, Peter. It was really very, very helpful and continuing to
Thank,
educate us all.
thank you all for taking part. I'm happy to do this. I'm very happy to be part of Savvy Ladies. I'm on the board of directors and I'm the treasurer there. And I believe in our mission, and I think we do good stuff. So anytime you can learn something new, please take part. Thanks again.
Okay, thanks, Peter. Bye-bye, everybody.
Bye bye.